So here we are, the midpoint of the year with second quarter officially over. And wow, what a roller coaster ride it's been for the housing market. Are home prices down? What are some of the big changes happening in the market? Let's take a look at how the market is today, along with my 3 predictions for the second half of 2023. Let's dive in. All right, welcome back everyone. I'm James Yu with Think Real Estate, a local realtor here in Crescenta. As we leave the first half behind, the major stories have focused around 3 things: inventory, interest rates, and home prices. So in my market here in Crescenta, we've experienced an inventory crisis throughout the second quarter. Typically, this period is the peak season for residential real estate, but this year has been one for the records. Both active and closed listings have seen a decline of about 35 to 40% compared to last year. However, the most shocking number comes from the new listing data. Usually, we see around 120 to 130 new listings during this peak season, but this year we only saw 68 new listings, which is 45% below the norm. Yep, that's nearly a half. There are a couple of reasons behind this. First, the interest rates have tied down potential sellers who are looking to move up or downsize to stay in their current homes. With most homeowners having mortgage rates below 4% and even 3% for many, it's financially challenging for them to accept the 6 to 7% rates today in exchange for that extra room, living space, or a larger backyard. Second, as a new listing data showed, the scarcity of available homes have created uncertainty for many homeowners, causing them to hold off on listing their properties. Sellers are also buyers, and they are hesitant to sell because they're wondering, if I sell, what can I buy? This trend is not just seen in Crescenta, but in the real estate market as a whole. Out of the 68 new listings we saw in my market, most sellers fell into what I call the 4 Ds categories: death, divorce, debt, and distance, aka moving out of state or relocation. Essentially, a lot of the inventory we saw were sellers that had no choice but to put their homes on the market. Many predicted that home prices would decline and buyer demand would diminish with higher interest rate this year, but the opposite has been the case. With mortgage rates fluctuating between 6 to 7%, it is true that many buyers got priced out and exited the market, but so did the sellers. This pretty much illustrates what happened in terms of buyer demand to sellers. This representing buyers and here representing sellers. If we were here before, this is where we are today. Buyers went down, but the seller in terms of inventory went down as well. There are less buyers today, but we pretty much witnessed a historic crash in inventory as well. And this is the reason why we haven't seen a major crash in terms of price, because demand still outweighs supply, as you see right here. Multiple offers became common once again. However, I have noticed a big discrepancy in sale prices between homes that were properly prepared, marketed, and represented versus those that weren't. As for home prices here in Crescenta, the average price was $1,315,000 with an average price per square foot of $883 for a typical 1,500 square foot home. Prices have continuously appreciated after hitting rock bottom in the 4th quarter of last year, and now we're almost back to all-time highs. Now, based on my research, market trends, and seeing what's happening on the ground, I have 3 predictions for the second half of the year. First, let's talk about home prices. Unless there is a substantial increase in inventory, prices will continue to rise. It's basic economics, supply and demand. Currently, there are no indication or clues suggesting a flood of homes will suddenly hit the market. This means that home prices will continue to appreciate due to low supply. However, we do typically see a slight drop in home prices in the second half due to seasonality. And I wouldn't be surprised if that happens this year as well. Second, interest rates should stabilize in the second half. The Federal Reserve is targeting a 2% inflation rate and wants to see unemployment rise before considering any rate cuts. Rates should hover around mid-6%, but they may start to decline towards the end of the year, early part of next year, once inflation comes closer to the target rate. It's worth noting that the inflation data relies on shelter data, which includes rental costs that is lagging by a year. As we're seeing softening in rents this year, so once that catches up, we should see a noticeable drop in the inflation rate, so hopefully interest rates will follow after that. Lastly, inventory will remain low as many potential sellers hold on to their low mortgage rates. However, as the market and interest rates start to stabilize, I believe more sellers will come forward, especially those who have been on the sidelines observing the market over the past year, who now see that their neighbors' homes are selling quickly and noticing prices are continuing to go up. I still believe rates will need to drop to the mid-5s or even lower to motivate more sellers to list their homes, especially those looking to move up and downsize. This doesn't mean a sudden surge in inventory or a drop in prices, because more buyers will jump in the market as rates drop as well. Instead, it means we will see a lot more activities with more people buying, selling, and moving. With that said, if you're a homeowner here in La Crescenta and curious about how your home's value has changed this year, click on the home value link below to get the most up-to-date home valuation. And if you have any questions about the market or thinking about making a move, feel free to reach out. I'm happy to chat anytime.